Bitcoin is a savings technology and a framework for evaluating Bitcoin, in your opinion, as it compares to the other options that are available to people who are trying to protect and possibly grow their wealth.
So I think the great thing about Bitcoin over, let's say, gold is that Bitcoin can actually be used as money. You don't require central parties to hold your Bitcoin. You can hold it yourself. You can hold with central parties, but you have the option to keep it yourself. The other option would be maybe stocks. Stocks are extremely risky. The company makes a mistake if they make a decision that their customers collectively don't like. If they do something that, if the executive team does something that really dilutes the purchasing power of their shareholders, I mean, there's a lot of issues there. There's a lot of risks there. Also, you can't take self-custody of your stocks. You still have to require a custodian to hold your shares for you, similar to gold. And then you have real estate. With real estate, of course, the problem is that you have to deal with tenants. You have to take on leverage. You have to borrow 80 to 90% of the value of the house in the beginning to actually take that house, to get that house immediately. I think one of the issues with this is that we're kind of feeding the monetary inflation with housing prices going up. And how I think housing has become a gamble, a speculative gamble at this point, because people are just buying houses to save for the future. They just think that house prices are going to go up forever. And they've assumed that they haven't really thought about the situation where maybe this isn't the case anymore. So I think housing is a lot more risky than people think, especially when you buy tons of rental properties. There are people with 30, 40, 50 rental properties, and they're not even making 200, 300K a year. So a lot of the money that's coming in to maintain the ownership of those rental properties is rental income. And then there's bonds. Of course, bonds are impacted by inflation rates. They're impacted by, not inflation rates, interest rates. When interest rates rise, we saw how big the collapse was for TLT over the last maybe 2 years. The 20 plus year bond fund that we have, it's a bond ETF. It dropped 60, 70%. 40 to 50%. Who would have expected that they could buy this essentially risk-free investment vehicle and lose so much of their purchasing power in the short term? Which retired investor would have thought that? I mean, I'm sure there probably are a lot of investors who lost a lot of money because of that, and now they can't retire. Maybe they're delaying their retirement. And the issue with this is that all these legacy investments, all these legacy assets seem like they're guaranteed, but they're really not. They're guaranteed with the printing of money. So let's say if you invest in a stock, let's say it's a bank. You not even invest. Let's say you put your money in a bank, and then the bank will lend your money out to other people to make a profit. If you put your money in that bank, the government is basically giving you an incentive to keep doing that by insuring your funds. But all they're going to do is print more money to make you whole at the end of it if that bank goes bankrupt. So banks here, in this case, just in this example, banks are getting some oversized returns while you're getting next to nothing. So if it almost feels like the entire financial system, the entire system that we have, is designed to just filter wealth to the people who understand how it works, and everybody else just loses because of how the system works. So if you don't own rental properties, your rental cost is going to go up forever. If you don't own shares of a company and you depend on a 9 to 5 wage, your wage is going to go up maybe 2 to 3%, but your costs are going to go up way higher than that 2 to 3%. So the alternative, again, is Bitcoin. You could take self-custody. You know for a fact that nobody can make more. You know for a fact that nobody's going to damage your property. There's no maintenance costs. All you have to do is learn how self-custody works. You can use collaborative custody if you want to. There's providers for that. You can use multi-sig. You can set that up yourself. However you want to do it, I think the difference between Bitcoin and this legacy system is that self-custody aspect. That's the biggest difference, in my opinion, meaning that you can actually own your asset. Everything else, somebody else has ownership of it for you. So even if you buy a house, the bank is going to hold the deed. They're not going to give you that deed. I actually had a conversation with someone not too long ago where he was trying to get the deed, and they didn't give it to him because it has to go to a lawyer first. I don't know what the ruling behind that was, but his house is paid off. He should be able to get that deed in his own possession if he wants it, because the house is his. But is it really his? If you stop paying property taxes, then you lose the house. There are so many issues there, but then Bitcoin resolves all of those because there's no property taxes, there's no maintenance, all the list of things that I mentioned before. But that's the main difference. I mean, when somebody figures out what Bitcoin is, when they really figure out how it works, it becomes a no-brainer compared to the legacy financial system.